Hello everyone, great to have your company here on 𝐊𝐶𝐞 TV. I'm Rachel and you're watching The Buzzing Trends. In today's show we'll be looking at 5 ASX oil and gas stocks as OPEC's plans to gradually hike output. The Organisation of the Petroleum Exporting Countries and its allies plans to take forward its planned expansion in the production of crude oil, easing the pressure away from the United States to increase output. OPEC Plus consists of 13 OPEC members and 10 of the world's major non-OPEC oil exporting nations have agreed to stick to their earlier plan of boosting output in monthly instalments of 400,000 barrels per day throughout the latter end of 2022. Apparently, the loosely affiliated organisation had implemented an unprecedented production cut during the pandemic to clean the market surplus and stabilise oil prices. It came crashing down in the wake of sudden lockdowns imposed by several countries worldwide. The significant decision for a gradual increase in production came from a push from the White House. They urged OPEC to rapidly boost output as global sentiments indicate recovery from the impact of the pandemic, whereas the current supplies were not enough for such recovery to carry on with renewed momentum. Given this backdrop, let's now take a look at 5 oil and gas stocks and their performance in the last year. The first company on our radar today is Santos. They're headquartered in Adelaide and it's the country's second largest independent oil and gas company. Its name stands for South Australia Northern Territory Oil Search. In the 2020 Forbes Global 2000, Santos was ranked as 1,583rd largest public company in the world. The company reported robust half-yearly results back in August. Its net profit attributable to members was $354 million, and the revenue from ordinary activity stood at $2.04 billion. That was up 22% versus the previous corresponding period. Santos has been trading at $6.14 during opening trade today. Next company on our list is Oil Search. They're the largest oil and gas exploration and development company incorporated in Papua New Guinea, which operates all of Papua New Guinea's oil fields. Oil Search's half-yearly performance in the financial year 2021 was buoyed by the robust operational performance and recovery in market conditions, as well as consumer sentiment. The company delivered a record revenue of $667.7 million in the first half of 2021, while its net profit after tax landed at $139 million. That was up 463% from the previous year, beating analysts' expectations from the company. Oil Search shares were trading at $3.72 during opening trade today. And a reason to share Oil Search's info right after Santos is that Santos and Oil Search are in the process of a possible merger. They have a week's extension for the due diligence they're performing on each other as part of the initial step in their proposed all-share merger. Now, if the merger takes place, it will see Santos acquire all of the shares in Oil Search via a scheme of arrangement. Next company on our list is Woodside Petroleum. Now, Woodside Petroleum are headquartered in Perth, and it's one of the leading liquefied natural gas players in Australia. The energy player's net profit after tax for the first half of financial year 2021 was up 108% from the previous year's first half. The company has recorded an underlying net profit of $354 million and a reported net profit after tax of $317 million. Recently, Woodside and sector heavyweight BHP agreed to merge their oil and gas portfolios through an all-stock merger to establish a global energy company that is capable of featuring in the list of top 10 energy companies based on production. Woodside Petroleum has been trading at $19.55 during opening trade today. Well, it's time now for a very short break, but stay tuned. I'll be back with some details on Beach Energy and Zenix Energy.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With 𝐊𝐶𝐞 TV.
Hello and welcome back. We're discussing 5 ASX oil and gas stocks amid OPEC's plan to gradually hike output. Next company on our list today is Beach Energy. With its head office in Adelaide, Beach Energy is a well-known oil and gas exploration and production company. The company has its operations across various parts of the world. The total oil production stood at 25.6 million barrels of oil equivalent in financial year 2021, 4% down from the previous year, primarily due to lower production at their western flank. The company has recorded an underlying net profit after tax of $363 million during the financial year, and they announced a fully franked final dividend of 1 cent per share. Beach Energy has been trading at $1.06 during opening trade today. Moving on to the next and last company on our list, it's Zenix Energy. Based in Brisbane, Zenix holds assets in one of the most prolific onshore energy regions of Australia. The company's sales revenue during financial year 2021 was up 103%. at $109.6 million, while its natural gas production was up 140%. The underlying net profit after tax of Zenix returned to a profit of $5.4 million during financial year. On the 2nd of September, Zenix inked a new gas sales agreement with Opal, an Australian packaging and paper manufacturer. Zenix Energy has been trading at $3.16 during opening trade today. With that, it's time to wrap up today's show. I hope you found it informative. Stay tuned for more news and updates on 𝐊𝐶𝐞 TV Live. This is Rachel signing off for now.